Now, the part of our show that seems to garner a lot of attention from individual investors is the part where I talk about three things that I think individual investors need to focus on before you make your investment decisions. And as I said off the top of the show, there's nothing there that says tariffs or trade. So definitely different topics this show, and we try to bring you some new ideas. The first one, the Fed chair speaking at Jackson Hole this Friday. And as you may recall from other shows we've done in previous summers, we talk about the conference that the Federal Reserve puts on in Jackson Hole, Wyoming, where they make announcements, they talk about policy. And at the end of the conference, Jerome Powell, the head of the Fed, chairman of the Fed, will have a speech, and we all will listen to his speech, parse through every word, every pause in his speech. We'll probably chop it up a million different ways to figure out what is going to come of their next interest rate decision, I believe on September the 17th. And a lot of pressure on the Fed right now to cut rates maybe once or maybe even a couple of times for the remainder of this year. So we're going to talk about the Fed and Jackson Hole. Corporate earnings. Yes, we've pretty much done or gone through all corporate earnings except for just a few. And what are those few? Well, the biggest company in the world today, Nvidia. Nvidia will report earnings, I believe, next week. I think it's the 27th that they will report. Largest company in the world. What they say, how they say it, and what they say going forward. Their look ahead for future business will definitely move the tech sector, the chips market or sector, and the markets in general. And definitely not to leave behind in any way are banks. Canadian banks will report earnings next week as well, and definitely a market mover for many Canadians who own a lot of bank stocks. And third point, buying good value wins out in all markets. And I'll explain what I mean by that. A lot of people saying, Allan, if you think that there's going to be some choppy markets ahead over the next 4 to 6 weeks, would you still be buying into this market? And my answer is, if you own good value at a good price, your investments will rise over time through any type of market. So let's go to our first topic, Fed chair at Jackson Hole. And I guess we can talk about what's been going on. As many of you know, a lot of pressure being put on by the Trump administration with respect to wanting the Federal Reserve to cut interest rates. I know that President has said many times, if the Fed were to cut rates, then the interest on the U.S. debt would, in essence, be obviously a lot less. And that's not, unfortunately for the president, not what the Fed is supposed to be doing. If you want to have less interest payments on your debt, then my advice would be to have less debt as a country for the United States. So there's a lot of pressure going on. There's a lot of, and we talked about this last show, a lot of now a few Fed officials actually breaking away from the consensus at the Fed, saying they should be cutting interest rates, perhaps not for the same reasons as the President Trump wants, but because things are starting to slow down. Our first chart here is the target range for the Fed funds rate. You'll see here 4.25% to 4.5%. It's come down a little bit, but definitely not as low as it's been over the last, well, let's say over the last 5-10 years. We are at high points, and many believe, many economists, many people that are vying for the next or to be the next Fed chairman are saying that the interest rates are what they would say or call in restrictive mode. And I guess with people now putting a lot of pressure, with the jobs growth starting to slow, economy's slowing a little bit in the US, still not bad, but definitely slowing. I think a lot of people, a lot of investors are betting that the Fed is going to cut rates. And they're betting pretty hard. So much so that, as our next chart will show, they're betting that there's about an 85% chance that the Fed's going to cut rates in September by at least a quarter point. And we could show that chart up right now, 84.8%. The CME Group Fed Watch tool, there it is. You can see on the left-hand side, it's tough to make out the number, but you can see how large of a bar that is. It's 84.8% chance of cut. and only a 15% chance that they're going to leave things as they are. So it is interesting that everyone is on one side of the boat, so to speak. And at times, when you see those kinds of things where everybody's betting on something to happen, if it doesn't happen, well, what would that mean for the stock market? I would say it could be a big negative for the market. So if Chairman Powell, if the Federal Reserve in general does not cut rates in September, that might mean a bit of a pullback for the markets, which would coincide with the time of year that we're at. Usually September is a bit of a volatile month, one of the negative months for the year, as we'll see in a little bit later on in the show. Our next chart shows that there actually have been pretty big bets, open interest builds in the options market for as much as a 50 basis point cut. So cutting rates by 50 basis points. Look how much that black line has moved higher. And that's for open interest calls that they're going to cut 50 basis points. So a pretty big bet is being made that the Fed is going to begin to cut rates, either a quarter point or as much as 50 basis points. And as I said, if they don't make that cut, if they once again say, well, we're just going to keep waiting to see what the data shows us, which is what I think they should do, then I think that would cause some volatility for the markets, take the markets down a little bit on the day of the meeting. One of the reasons why, as I said, I think that the Fed probably could make a case for not cutting is our next chart, which shows the unemployment rate in the United States at 4.2%. Unemployment rate has definitely gone up over the last little while from about 3.5% in 2023, as you can see, to 4.2%. But I think everybody would probably agree that the U.S. is pretty much at full employment. Many states, you're even hard-pressed to find workers to fill the jobs that President Trump wants to fill if they bring back or when they bring back manufacturing to the U.S. So with employment so strong and inflation starting to tick higher, as we're going to see, I have a few charts later on in the show, I just don't see why all of a sudden roughly a 2.5%, 3% inflation rate and a 4% unemployment rate, all of a sudden that means the Fed should be cutting rates. When those numbers existed, 6, 12 months ago, we said inflation wasn't low enough and they would not consider cutting rates. But now all of a sudden, these numbers seem to be low enough for the Fed to cut. So we're going to have to keep an eye on what Jerome Powell says at his speech at Jackson Hole. It's definitely going to be a market mover. Our second point that I think individual investors should focus on over the next 5 to 10 business days, as we've said, are corporate earnings. Corporate earnings, for the most part, we've seen the majority of them, but the big one, the granddaddy of them all, the biggest company in the world today, the company that has moved more so than really any other stock over the last, let's call it, few years. It's not the biggest market mover this year or biggest gainer this year, but it has been one of the biggest gainers over the last few years, has been Nvidia. And they're going to report earnings next week, midweek. And we can pull up a chart of Nvidia that we have. And you can see it's been a fantastic chart. There have been some times where people have sold off. And one of those times was earlier in the year and back in March and April. You see the chart coming down. But really, since, let's call it, end of April, this stock has been on a tear, pretty much a straight line from the bottom left to the top right. We're hearing a bit of rumblings in the last 24, 48 hours of some investors saying that the tech space all of a sudden looks overvalued. And we've seen Nvidia come off a little bit with some of the other chips companies like AMD and Micron and some of the others. But overall, Nvidia, a big market mover, and it's a name that we're all going to be watching for those results in about a week's time. Some of the other companies that one of them just reported recently, Home Depot. We have a chart on that. Home Depot is one of those stocks that many people believe would benefit tremendously from a lowering of interest rates because that would spur on or I guess cause some activity or increase the activity in the housing sector. And where does Home Depot live? In the housing area. People trying to renovate their homes, people trying to improve their homes, home improvement. That's where Home Depot lives. And even though they had mixed results, they basically said that they're keeping their forecast for a remainder of year. And I think they were rewarded for that. And the stock on that day, as you can see, went up 3%. And the now trades just over $400 a share, down a little bit today for investors. Some of the other names, as I mentioned, that are going to be reporting next week, Canadian bank stocks. Our first chart shows TD Bank stock, trading now over $100 a share. What a run it's been on since April. I remember the days when a lot of people were concerned about TD Bank, about their money laundering situation, their issues down in the US that TD had. The stock fell to as low as maybe $75, $76, but has come roaring back to over $100 a share once again. And we're going to hear from these banks. What are they going to say about business, about lending in this market? I think we're going to hear some difficult talk, I think, in the lending market. We'll want to hear about TD's business in the US. We're going to want to hear about net interest margin, how much TD is setting aside for bad debt or debt that could possibly be defaulted on, wealth management fees, what's going on at the banks, what is the country look like? Because as we say always, Canadian banks are the bloodline of the Canadian economy. Our next chart, CIBC Bank, you can pull it up there. You can see the chart looks very similar to TD. And we have the third chart, the biggest bank in Canada, which is Royal Bank. Royal Bank stock also doing extremely well and has done well even in the month of August. So there doesn't seem to be any slowdown in this stock, getting closer and closer to $200 a share. And this stock, or this bank stock, has just powered through everything. For any of you that have owned shares in Royal Bank over the last couple of years, you've been quite pleased. And it'll be interesting to see what they say. It is interesting to hear what they say, I should say, about Canadian lending, Canadian business. Royal Bank is such a large bank, one of the largest banks in the world, that they obviously have business all throughout the United States and other places. So Royal Bank, definitely something that individual investors need to focus on. So overall, even though we've been through earnings season, still a number of investments, corporations got to report earnings that are going to make a big difference in portfolios. Being Canadian, a lot of Canadians own Canadian bank stocks. And if you've been invested outside of Canada, chances are you've been invested in the tech space and Nvidia. Whether you own the shares directly or you own other shares in the tech space, all of that will be affected by what Nvidia says next week. Our third point that I want to focus on for individual investors to consider before they make their investment decisions is this idea of buying good value, and buying good value at good prices wins out in all markets. And as I said off the top of the show, I wanted to talk about this because I've been getting some questions from individual investors, as I do always. And they're saying, Allan, if you think there's some volatility coming in the months of August and September, why would you be a buyer into this market? Let's wait a little bit and maybe buy afterward. And yes, I understand that way of thinking, but we just don't know if August and September are going to be bad months this year. August hasn't been too bad so far. I know now we're getting into the latter half of August, which usually is where the volatility starts. And as we know, September is notoriously a negative month for the market, slightly negative. We're not talking big negative numbers. So why not wait? Well, the first answer is because we just don't know if the pattern of volatility is going to hold. And our first chart will actually show us this. We see a chart here which shows seasonal returns by month. And yes, it's tough to read some of these numbers, but I think the main idea is green means growth and pink means negative. And if you look at the top, right along the top are the months of the year, and the first row is average. And you can see everything is in green pretty much except for 2 pink months, which are August and September. But if you go down the columns, not every August is negative. If you look at 2024 was positive, 21 was positive, 20 was positive, 2018 was positive. Even in September 2024 last year was positive, going to 2019, 18, and 17. 3 positive years in a row. So it doesn't mean just because on average something happens that it's going to happen every year. So understanding that oh, let's hold off. Well, you might miss out on some good gains. And if you look at the types of investments to buy, if you consider buying good quality at a reasonable price, and we call that GARP investing, and GARP stands GARP, growth at a reasonable price, you will see that owning good quality investments at reasonable prices are able to withstand a lot of volatility, or let's call it a negative environment for stocks. They can power through. They may fall, but not fall as much, and they tend to rebound a lot quicker as opposed to owning names or stock that is a high flyer, that is very highly valued or highly priced. And those are the ones that tend to fall the most and the quickest. They start with those names, the market sells those names off first, and then moves to the better value names later on. And so the downside risk, how much you could lose, let's say, in putting in layman's terms, tends to be less with cheaper names that you own, good quality names on the cheap, than the high flyers that you buy at high prices. Our first chart that we have for this, a second chart that we have for this segment is Invesco QQQ. And what this is the tech index, pretty much, the NASDAQ. And you can see here, yes, we had a difficult time in March and April earlier this year. But if you look at the bottom part of this chart, it's a longer term chart. And you can see how these types of negative, let's call it negative moments or points in time that are negative, over the long term, you really don't see an awful lot of that. It kind of gets, lost in the market, meaning over time, this market goes higher. Good quality names go higher. And what are the best quality names today? Yes, I believe the best quality names are in tech. These are the biggest names in the world. These names seem to move at times less than other names in other sectors. If you take, for example, Apple during the pandemic, and you were to compare that stock of Apple, for example, at that time, the biggest company in the world, compare that to bank stocks or other stocks, you would have found that Apple actually fell less during COVID times than bank stocks did, and other stocks in other sectors did. So tech has been able to withstand a lot of the volatility that you get from a seasonal perspective or from other means. So Invesco QQQ just tells us that you own some good quality tech names, you own them at good prices, they're going to power through. Some of the actual individual names that I wanted to show you today, we've talked about these names in the past. First one, Alphabet or Google. We have a stock, there it is. You can see here, yes, there have been ups and downs along the way, but pretty much if you look at the start of the year, forget about April, which was the bottom of the market for this year. But if you look at the start of the year and you draw a straight line, you're going from the bottom left to the top right. Google trades at about 20 times forward earnings. Compare that to a name like Nvidia, which is at 40 times, AMD 40 times. A lot of other tech names trading much higher, which I'll get to in a moment. So a name like Google, I think, is a fantastic name to own, even during perhaps a volatile month like September. Our next stock here is a name that we all talked about many times, Meta Platforms, or formerly Facebook. Once again, Meta able to power through most difficult times. They are a stock that people definitely look at to buy on the dip. And if we do get a bit of a dip in the last couple of weeks of August and into September, I think individual investors, if you can handle the risk that a name like Meta brings, it could be a name that investors buy on the dip. Now, if you were to contrast names like Meta and Google with a name like Palantir, Palantir Technologies, a name that some of you may be familiar with. Palantir basically makes software to analyze lots and lots of data. So who uses Palantir probably the most? Government. Government uses Palantir software to analyze data on immigration, analyze data on many different things. And Palantir has become very important to the United States government. And because of that, and because of their AI that they've incorporated into their business, Palantir has been, as we'll get to shortly, the best performer this year, even with the recent pullback. But if you look at a name like Palantir, let's pull up a chart of Palantir. You can see that if you look at the far right-hand side, that's a name that has been selling off lately. I think they've had 8 or 9 days in a row where they've come down. A name like Palantir, 150 times earnings. Just a crazy number. Buying and owning that stock, you got to understand you're in for a lot of ups and downs. You've had a lot of ups recently. Perhaps you're going to see some downs. We're already seeing it already in the month of August, but perhaps we could see some more downward pricing in the next 4 weeks. So a name like Palantir, again, good name, good company, but just too high price. So those are the names that tend to fall quickest and the earliest. And our next chart, we can pull up IBM. Why did I pull up IBM? IBM tends to be one of those blue chip names. We used to call IBM a blue chip company. Never really moved an awful lot, went up gradually over time. Well, I can tell you that IBM, I would say there's probably no such thing as blue chip anymore, but IBM has been on a tear since April up until about, let's say, beginning of August, maybe towards middle of July. IBM has had a fantastic run. The stock has moved all the way up from like a 12, 13 PE or price to earnings ratio to over 20. And so you say to yourself, okay, do you want to own IBM in a market where you could have some volatility at this current price? I'm going to say probably not, because I think IBM now is overpriced, a little bit expensive. And we're seeing IBM volatility right in front of us play out. You're seeing it on this chart. It has come down quite a bit already in the latter half of July and the month of August. And so once again, you want to buy good quality names, but you want to buy them at good prices. So it's kind of like a two-prong attack. You want to own good names. You want to own them at good prices, because when markets turn down, it's the good quality, and it is the names that you bought at good pricing that will hold that pricing best. They have, I guess, the least or the less margin for loss. Whereas if you buy something that is highly priced, the opportunity to see a pullback is much greater. So the last point I wanted to make for individuals to consider before you make your investment decisions is to own good quality names. Go out and buy those good quality names, but buy them at good prices. And I think if you do that, you can continue to buy stock even during volatile times, such as the last few weeks of August and into the month of September.